Then that dealership, when you're on the way out of buying your car, they go, hold on a second, I got to go talk to my financing guy. And they come back and they go, by the way, we have all these 3 additional products. You've got warranty, you've got gap coverage, you've got wheel and tire. It's an extra 10 grand for this. You go, well, that wasn't what I was thinking about coming in to pay and buy for my car. Well, that's because those products, those dealerships have the ability to artificially mark them up. In fact, when you actually purchase that extended warranty coverage above and beyond the manufacturer's warranty, car dealerships on average will mark those up anywhere from 100 to 600%.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, they're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim?
Yes, Sean.
Who's a good client for PMR?
Property Management Redefined is looking for property owners who value 3 things: accountability, reliability, and a results-driven approach. They want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value because they do it so well is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. We'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Today, Sean, we have one of your connections on that I recently found out. We have Clint Houck, VP of Insurance and Distribution at Fair. What's going on, Clint?
Hey, happy to be here, guys.
Thanks for having me.
Thanks for coming on. So some background on Clint. Clint has nearly 2 decades of insurance industry experience, spanning roles as an agency owner, as well as multiple leadership roles with carriers and insurtechs. I'm going to need to get some more info on insurtechs today because that comes up a lot and I've never really gotten a full definition. Throughout his career, he is focused on helping agencies implement the tools, systems, and processes they need to grow, operate more efficiently, and deliver a stronger client experience. At Fair, Clint leverages his background to build scalable distribution and deepen carrier and agency partnerships across the country. With a BS in management from Penn State University.
Go Nits.
He also hails from Bucks County, Pennsylvania. I'm going to start this one different. I've never started an episode this way. I want to start it with your quote.
Okay.
Because I really liked it. So your quote was, objective judgment, unselfish action, willing acceptance. Never in a hurry, never worried, never stopping short. And it was from Ryan Holiday's work in Stoicism. Talk about that quote and Stoicism in general.
Yeah. So, I think if I counted now, this is my 5th or 6th startup to be a part of, depending upon how you count starting insurance agencies as a startup or not.
Yeah, absolutely.
And so with the stress that comes from that experience and growing, I was looking for ways to mentally find that balance. And so that's where I came across Stoicism. Actually, originally it was the Tim Ferriss podcast. And listening to that, and he had brought on Ryan Holiday. Ryan Holiday has really taken all of these ancient Stoic texts across generations and individuals and condensed them and reworded them pretty much for modern day times and written a number of books on different components of Stoicism. And at the end of the day, those are two of the quotes from his different texts that is really just talking about, hey, show up every day, do the things that you need to do, and ultimately have the patience for them to develop. And I think that's sometimes some of the hardest things when building a startup is you're like, hey, I am grinding. I am doing all the things I'm supposed to be doing and checking all the boxes and in all the different ways, and nothing seems to be happening. And nothing seems to be happening, and nothing seems to be happening. And then all of a sudden there's that avalanche moment or that breakthrough moment when it starts to all come to fruition, where in the past in other roles I may have given up or stopped short. But that experience has taught me that you just keep doing the right things day in and day out, and the results come.
Awesome. Correct me if I'm wrong, because I like Stoic quotes. Stoicism, is it more or less, and again, I'm probably not explaining it completely correctly. It's like control the controllables.
Right.
Like things that are outside your control, try not to worry about them as much, because if they're outside of your control, what good is it doing you to worry about it? If it's within your control, let's say it's like trying to wake up earlier, that's up to you. Control the controllable, and that way a lot of the things will fall into place, keep you a little less stressed, keep you a little bit more patient. Is that like semi-correct?
Yeah. I think of it as, hey, I can control what happens inside of me. I can't control what happens externally. And so how I think about things, how I carry things, even how I operate on a daily basis. I joke, I call it optimizing laziness. Yeah. So like a perfect example of that is, hey, I've been traveling on the road nonstop for the last week and a half for conferences and events. And, the opportunity came up to jump on this podcast this morning. And, one of the things I'll do is, and it's simple, right? But you prep your coffee the night before. So I wake up in the morning. I don't have to be thinking. I don't have to decide if I want caffeine or not. I hit the button and the coffee's prepped for me. And so I think about that in every aspect of life. That's a really simplified example.
But it's a good example.
But it's how do you prep your life to be able to be lazy, for lack of a better term. Everybody talks about maximizing efficiency, maximizing effectiveness, and that can sound overwhelming, but
like a little too much.
Yeah.
Yep.
But if you're just saying, like, how can I make life as enjoyable as possible, but still get done what needs to be getting done? That's where that optimizing laziness comes in.
I think it was, it might have been Bill Gates or something. Some of
your boy,
Steve Jobs or Bill Gates. I forget.
Both your boys.
Yeah. One of them said, I look to hire some of the laziest people that I can find, because they have a way to figure out how to do things, but in a very easy manner.
Interesting.
Yeah.
Well, I think about that, like, even as building this company this time around, we're in this age where everything's AI focused, right? And you go to insurance conferences, every company there is now an AI company. And there's this big debate on, how practical and useful truly AI is in the insurance industry, and where it's smoke and mirrors and where it's reality. But, when we think about growing our team at Fair now, as we continue to grow and scale, it's not necessarily the easy way would be to just hire more bodies, do the traditional carrier model of, hire a bunch of reps and be, very people heavy. But we think about it now of saying, all right, can we be lazier in saying, hey, what if we don't have to manage so many people?
Yeah.
Right. What if instead we can
saves money,
optimize,
saves time.
Yeah. In using technology in an efficient way, in an effective way, not a smoke and mirrors way, but in a way that says, hey, we can get more out of people without them feeling more stressed or overwhelmed by the workloads.
A good segue opportunity to tell everyone what Fair is and define for Tim what an Insurtech is.
I was just going to say that.
Yeah, so I'll start with an Insurtech. So an Insurtech is really, there's many different ways that people will define it or nuances to it, but at a broad level, it is a technology-focused company that is working inside the insurance industry.
Like fintech is finance.
Yep.
Prop tech is real estate. Insurtech is insurance.
Right. So it can be software and systems that help at a carrier level, at a broker level, at an agency level. It can even be a digital insurance agency or a company that set themselves up as digital first, and the product that they happen to sell is an insurance-related product. So it depends on the person you talk to on where that line is from a technology standpoint.
Very cool. And then what about Fair? Like, what is Fair exactly? Like, what do you guys do? Like, who you servicing? That kind of thing.
Yeah. So Fair, we are a new carrier in the space. Traditionally, our industry...
You're like an actual insurance carrier.
So we're not insurance. Traditionally, people would define our product as warranty, or that's what you would hear. All those extended warranty commercials.
Mostly auto?
It's all auto
auto.
now.
Okay.
We'll be expanding. But right now, it's all auto. And traditionally, our competitors would solely sell 100% through car dealerships, or through mailers or TV ads, right? Direct to consumer or through the car dealerships. We're taking a different approach to this. We believe that mechanical breakdown, which is really what a warranty is, it protects your vehicle if it has a breakdown. We believe this coverage more closely aligns with the insurance industry and being offered through that trusted advisor that's looking at all of your risks and protecting either your business or your home and your family, and not live outside of that ecosystem or attached to a car sale. Yeah.
So instead of the original warranty, let's call it, the one that we know, bumper to bumper warranty, you get that through the dealership. You buy a Jeep comes with a warranty if it's new, and it's like the warranty company has a relationship with the company selling the Jeeps. Mm-hmm. But you are doing the relationship with guys like him.
Correct.
Because you want to offer that warranty, alongside his insurance policies as a separate thing? Like, how does it work if we're working with him?
Yeah. So think about it this way. So where it really complements is with auto insurance. So your average consumer, and I've built multiple insurance agencies. I've worked with a number of customers, hundreds of customers for auto insurance. And, a lot of folks don't fully understand their auto insurance policy end to end, right? Could you name all the coverages on your policy today?
Hell no.
Right. It's something that you think about when you need to purchase it, and then you think about it again when you have a claim. So what happens for a lot of consumers, they think, hey, if something happens to my car, insurance comes in and covers me. Mm-hmm. And logically, that makes sense, right? So if you have a active nature, fire, flood, hail, theft, well, that's covered under comprehensive under your auto insurance. If you strike an object or an object strikes you, that's covered under collision under your auto insurance, because those are both accident related. But let's say you have a breakdown, or you get yourself locked out of your car, you get a flat tire, you run out of gas. Well, there's emergency road service to help get you back on the road through your auto insurance. Even though there's no accident there, it's just hey, you need some towing support or lockout support. There's coverage for that. But if your car just breaks down, just has a mechanical breakdown, there's no coverage for that under our auto insurance. So from a consumer experience, it's like, wait a second, 90% of the things that happen to my car are covered under auto insurance, but this one thing isn't.
Yeah, the 10%.
Why does it live outside the ecosystem? Not only that, I can't even buy that through my insurance provider or agency. The only place I can buy that is at point of sale when I bought my car and it got pushed on me by the F&I shop trying to get out the door with my new car, or because I happened to answer one of those direct mail ads or see one of those TV infomercials and call the phone number. So it's a broken ecosystem from a consumer experience standpoint in the way it's offered today.
Yeah, so I'm buying a car hat on. So I go buy the new car from the dealership. A lot of times, if not every time, I don't know this whether it be right or wrong, it comes with a warranty.
Yep.
And the warranty's like mileage based or year based or both or whatever. So you're like, cool, I just bought new. If something goes wrong with the engine, like year one or under this mileage, I'm fine. Everything will work out. But if I go buy the used car, there's not really going to be the dealership's not really going to offer anything. Maybe they will, maybe they won't, probably not. But if I want to control it myself, I could go to Sean and say, hey, is there a warranty option through you that I could put onto my insurance policy? Would that be a correct?
Yeah, you're
Correct
close
enough
there.
example?
I mean, so the first half of that example is, hey, you go to buy the new car at the car dealership, you get a manufacturer's warranty, right? The manufacturer of the vehicle gives you an initial manufacturer's warranty coverage. Then that dealership, when you're on the way out of buying your car, they go, hold on a second, I got to go talk to my financing guy. And they come back and they go, by the way, we have all these 3 additional products. You've got warranty, you've got gap coverage, you've got wheel and tire. It's an extra 10 grand for this. You go, well, that wasn't what I was thinking about coming in to pay and buy for my car. Well, that's because those products, those dealerships have the ability to artificially mark them up. In fact, when you actually purchase that extended warranty coverage above and beyond the manufacturer's warranty, car dealerships on average will mark those up anywhere from 100 to 600%.
Damn.
Yep.
Did you know this?
I knew that there was they sell you on that extended coverage.
Yep.
I know that they can like give you the price, and then when you say no, they say, well, let me go back to my finance manager and see.
Did I say $5,000? I meant $2,500.
So I know that there's like games to be played when you're at the dealership in terms of
taking people's temperature.
Yeah.
Seeing how important that is to them.
Their margin is whatever they can convince you to pay.
Very interesting.
Quite honestly, feels almost predatory in a consumer experience because you're uneducated in the space. Just like, do I know what my auto insurance coverages are? Do I know how much a warranty coverage should actually cost or not? And when you have a claim, do you go back to the dealership? Well, no, they direct you towards your provider that was in your paperwork. Do you still have that paper contract somewhere? Well, I don't know. I worked with the car sales guy. Yeah. Right. So then the experience on the claims side of the house, you've got to chase down who do you contact. And usually there's 2 or 3 intermediaries between the ultimate warranty carrier than the end consumer for being able to take care of a claim.
Interesting.
The other really tricky part is these costs, then the dealerships will roll those costs into the actual vehicle loan. So not only have you now paid 400% more for your
they'll just
warranty,
add it on and do the finance will be based off of that.
So take that $10,000, put it into your finance agreement.
So it's a $50,000 car, now it's a $60,000 car.
And now you're paying interest on that because it's tied in with the financing.
Oh, slick.
So you're just getting overcharged, and now you're stuck in a product that's built into your loan, so you can't even really get out of it until you refinance your loan. And so you can quickly see how this system has been built to really, let's say, nicely maximize the revenue that these players can generate from consumers.
That's a nice way to put it.
Off your auto emotions.
Yep. So we think there's a better way for consumers, and we think there is a more valuable product for agencies to be able to bring in and help protect their clients.
Did you help start this company?
So I came in about 6 months ago. I actually met the founder, Will Betteridge, and the team at Fair when I was on the Ventures and Innovation team at State Farm.
Oh, wow.
So State Farm has a $200 million CVC fund. They've got a very large innovation team that looks to...
They're looking to like invest in things?
Invest in things, bring them in as partners. Yeah.
Oh, wow.
There's a number of large insurance carriers out there that have similar programs and platforms. And so the way a CVC works is saying that it has to be a strategic partner. So not only do they invest in companies, but that company has to be become a product that State Farm uses as well, as a general rule of thumb. So Fair was in its very early days, getting their seed round of funding, more of an idea than a company at that point. But I saw the value in it immediately because of the coverage gap and the customer experience. So I stayed close with the team as they continued to build out the product. Their thesis was always to distribute outside of the dealership and distribute through the insurance channel. Wow. And so just help provide some guidance there. And then they got to a level where they said we needed somebody to run distribution partnerships in the insurance channel. And so I joined. We're 11 people right now in size.
Very cool. Mm-hmm. Are you guys based locally? Are you based somewhere else?
We're an all distributed team. So our headquarters is out of Scottsdale, Arizona, but we've got team in Boston, New York, Philly, Chicago. So wherever we find good talent, that's where our folks are.
Did you know about that VC stuff from the big box insurance companies?
So not specifically that, but the one thing that came to mind was there was the TV show, if you remember the guy from the Houston Rockets, the owner, and he was the Golden Nugget guy in Atlantic.
Oh, yeah. I remember. Oh,
What's
dude,
his
I remember
name?
this show. What the hell was that guy's name?
Yep. So what he used to do was he used
He
to.
was a superstar.
I can't think of it. I can see his face.
Pulling
But
up right now.
what he would do on that show was he would be an investor in a company.
Okay.
But it was only companies that would align with what his current roster of companies were. Meaning he'd own
Hillman Fertitta.
Fertitta. Yeah. So like he owns hotels. And so people would come in, and there was one person.
Show was awesome.
It was great.
What was the name of that show? Remember?
It was like not like The Rookie or not The Apprentice, but something like that.
Oh, that was really good.
But so like I remember the one, she was like this small little like woman who owned a business, and she would make like soaps or shampoos, and he would invest in that, but he would also be the guy who would make like a purchase order of like 50,
billion
million dollars. And so it was,
what it was called.
hey, I'm buying you, but I'm also propping you up
Yeah.
and giving you this massive deal so that it can be your first of many. And
Like
then,
it's good for me, but it's good for you. So it was like the strategic partnership.
Yeah, that strategic. If you can automatically become almost overnight one of their largest, if not their largest customer, you instantly mark up your own investment return,
Right.
Because
Yeah,
the valuation of the
true.
company
Just go,
increases because now you got a 7-figure deal from as a new customer, and that customer happened to invest in you in your prior round. But it's one hand supports the other in that.
Yeah. So what was great about that show, because I watched it too.
oh, it's a great show.
He was always like, hey, we sell X amount of sandwiches per year. I mean, again, I'm just putting an example out there.
No, it's true. Yeah.
And then you make this bread. What do we pay for our bread? What's your bread? And your bread is so much better. Is there a way that we can get the cost of your bread down to the cost of our bread?
Yes.
So that your company is growing, we have better bread, and strategically we're aligned. Like you want to keep making bread to support the fact that we sell a shit ton of sandwiches. And dude, that show was so good. So
and it's the same kind of thing. So like you have a warranty product, right? That insurance aligns with, because now as an insurance agent, I can offer that a better pricing, better protection all around. My client's better protected. And then it becomes one phone call. Oh, I was in a car accident. Oh, I had this happen. Oh, this broke down. So it does align in that way.
Well, and Sean, so inside your agency, when you sell an auto insurance policy, how long on average would you say it takes one of your agents to sell auto insurance only?
Start
to finish.
I would say, I don't know, a couple days.
Okay. Actual talk time.
Back and forth a couple times, a couple hours.
Okay. Now add homeowners insurance into it.
Couple more days, a couple more hours.
Great. Yep. So that's the normal sales cycle to cross-sell inside of an insurance agency when you go from auto to home.
Yeah.
Because completely different questions.
Yep.
Completely different coverage.
yeah, two totally different things.
Two totally different things. The cross-sell from auto insurance into warranty is, all right, Sean, we've talked about liability, we've talked about medical payments, we've talked about funeral benefits. Next section of coverage is about protecting your car if it's damaged.
Yep.
Comprehensive, acts of nature, collision, if you strike an object, mechanical breakdown, if your car breaks down. You select a deductible, and then the companies pay the rest. What would you like your deductible be? That's the cross-sell.
Yep.
Interesting.
You took 15-second cross-sell from auto insurance into warranty, that mechanical breakdown coverage, because from a consumer experience and from your agent's experience, it's just talking about one more coverage in the already existing coverages that you're reviewing for their auto insurance. And then from an underwriting question standpoint, there's only one additional question that isn't asked in auto insurance, and that's how many miles are currently on your car. So there's not even,
capture that on intake, and it's already there.
Right. So it feels like one same sales conversation versus having to have a completely different sales conversation. And quite honestly, agencies can see that they're doubling their revenue per auto as a result of that with a 30-second cross sell.
The more appropriate, I think, analogy might be on the home side with flood insurance, because you have your homeowners, flood is not included. And the presentation of flood is, well, here, your home policy doesn't cover flood. Here's your proposal for flood coverage.
Yep.
And so it becomes, you're rounding out that coverage, making them aware of what's available. And similarly with the car, it's the car, different company, different, because the home, you can't really just add flood on.
Right.
So it has to be outside of who that homeowner's insurance company is. So it's kind of similar in that way where you're rounding out the coverage. It's different, but it's like just linked.
Yeah. Neptune Flood is a private flood provider that, I don't know what, 5-8 years ago at this point has that started up, and they proved out and validated that exact workflow that you talked about.
And as long as and Nick Ruscio is our Neptune rep. Shout out to Nick.
Shout out to Nick Ruscio.
He's a great guy to talk about flood, business, technology. Like he's got it dialed in. But what makes Neptune go is that I can be prior to them to get a flood insurance quote.
It was brutal.
It was brutal.
Yeah.
It was get on the system. You've got to log the address. You've got to, does it have a basement? It doesn't have a basement. How many feet above?
They were throwing a lot of the work on you. Sounds like.
All of it.
All of it. So you wouldn't go down that road because you kind of knew, like, oh, dude, this is just a pain in the butt.
Yeah.
Now Neptune, you like put the address in, and
they'll do all the work.
From address input to quote is like 5 minutes.
Oh wow.
Yeah.
Yep.
So what they did was they took a problem of quoting where it just became something you didn't want to deal with it, and then they enabled you to do that same thing where you could get the quote, and they just shrunk it down and made it within a couple minutes.
Yeah, and we took that same approach at Fair because, we distribute through a lot of different partner types in insurance. It can be a Main Street insurance agency. It can be a brokerage. It can be a digital agency. It can be a carrier or an MGA. So, we've built simplified UI UX for that Main Street agency that doesn't necessarily have the technical capabilities to integrate. We've got fully exposed APIs that take 48 hours to stand up for full quote and bind. So if you're a digital agency or an MGA and you want to build that into your ecosystem and white label it, you can do that. We even partnered with Canopy Connect from our APIs. So now any agencies that use Canopy Connect to collect deck pages for prospects, a warranty quote's automatically generated. And we don't have the same negative concerns around quoting like PNC does because we don't have clue report costs. We don't have MVR report costs. So there's no downside to quoting, and we've made it really
So your data
really
points are like 4.
Yeah.
I need this, and this, and here's your quote.
Right. And so it's just a really simplified process that doesn't break or disrupt the existing sales processes and systems inside of an agency, just like what Neptune did to simplified flood.
Same thing.
Yep.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the BNR word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. All right, so here's a question before Mooney goes too far down the insurance nerd track. How did you get into the VC work at State Farm? What got you into that?
So I started fresh out of college, pure insurance, right? I was a commercial fire underwriter. And it was actually for State Farm. That's where I got started in my career.
Oh, wow.
Runs in the family. My parents owned a State Farm insurance agency and grew it from there. And I graduated in 2008 when the economy collapsed. So insurance was really the only industry that was hiring at the time.
Let's go down this,
track. But, my career has always been when I see an interesting opportunity or I see a roadblock that's been hit and I don't understand why it hasn't been solved, I take that next step to go sit in that seat. So as an underwriter, I saw what agents were doing and the struggles they were having with applications and knowing eligibility guidelines. I went and became a State Farm agent. And then internet leads were really big at that time. This was 2012, and consumers were starting to shop online, and the insurance industry is scrambling to try to figure that out. Well, connected with a couple of lead gen companies out there locally in the greater Philadelphia area, and saw how we could successfully distribute insurance digitally. Well, at that time, the State Farm model wasn't allowing you to be able to sell outside of your territory or outside of your state.
Oh, because of the franchises.
Because of the franchises. So I go, well, why can't we distribute nationally as a digital insurance product? Well, let me go figure out how to solve that. So that was my foray into the independent channel.
Oh, damn.
So I surrendered my State Farm agency to go start an independent agency with a couple of co-founders that were running this lead gen company.
You started one from scratch in independent?
One from scratch.
Like this guy?
Exactly. Yep. And so built that in 2000.
That's why he looks so much younger.
Right.
He's out.
Right.
Yeah, exactly.
He was in and out. You're never getting out.
So I did that in 2014, 2015, stood up a digital independent agency. Thought, okay, I can build my own tech stack. I can design it how I want, and everything's going to work great. Well, didn't realize that the insurance industry didn't know what an API was, let alone how to spell it. Spent a couple of years, with these really manual processes, disparate systems that weren't talking. Carriers wouldn't open up APIs. Insurance-focused technology system, AMS systems, comparative raters weren't opening up APIs at that point. Couldn't understand why that didn't work. Didn't have enough leverage as an individual agency. So one of our carriers that we represented was State Auto at the time. They were going digital. They brought in a brand new leadership team that were taking an old school pen and paper carrier and modernizing it. And so I joined State Auto to say, all right, how can we modernize the insurance industry? I just found this passion for building tech within insurance, and not just tech for tech's sake, but tech that actually solved the problems that I experienced as an agent and as I saw our clients had inside my agency. And so spent a couple of years at State Auto. State Auto got acquired by Liberty Mutual. During my time there, got a lot more exposure to a lot of the insurtechs that were starting up in the industry.
Oh, all right.
Started joining insurtechs to help solve these challenges because these things were starting to open up. APIs were starting to get to be known. But then VC investment was a challenge in the early days in insurtech because these VCs didn't understand the industry and the market. And so they were investing into companies that were coming outside of the industry to replace insurance, right? They were going to replace carriers. They were going to replace agencies. And so
that's always the fear.
Right. And that was really attracted to VC because they had seen that happen on the finance side. Right, you were seeing that with Stripe payments. You were seeing this with this on-demand banking experience, and they thought it would be just as easy to do that in insurance. Well, it didn't end up being the case, right? A lot of these companies struggled and went out of business, and we won't even remember their names at this point from when that first kicked off. But it was hard to raise money as a true expert in insurance. Insurtechs built by the industry or by folks from the industry didn't understand the VC world. And so I had some of those experiences with our early insurtechs that I was a part of. And so I said, well, let me go figure that out from the VC side of the house. And happened to reconnect with some peers at State Farm who were in the innovation and ventures team, and they were looking for somebody to bring on. And so that was my opportunity to jump into that side of the business. So
very cool.
Every time I've had a problem, I've tried to go solve it from the other side of the table.
Listen, there's no more available job security out there than trying to find technology to fix insurance problems and non-connectivity.
Yep, absolutely.
Well, and part of it too is like 4 companies control all of the levers within
I could see that.
the distribution of data within the insurance.
Yeah.
space.
All right, so you're a process-driven guy.
I am.
Why processes? Like, is your upbringing, you remember from when you were young? Was it college? Was it your professional life? Like, why do processes drive you? This plays into stoicism.
Yep. So I had
Full circle.
Yeah.
I had to learn from a very hard and painful experience early in my agency career. So I started my State Farm agency in January of 2012. One of my early clients was a single mother of 2 young kids in elementary school. She was an IT consultant. She was an independent contractor, 1099, which meant she had no benefits. So she came into my office for auto and homeowners insurance. I helped her take care of that. I was 24 years old at the time. First time learning how to sell, run a business, do all of this stuff and try to do it well. Right. So I asked her about life insurance. That's how I was trained to cross-sell into the life insurance, uncovered the need. She expressed interest, but to Sean's point, we had just spent an hour and a half talking about auto and homeowners insurance. Right? That's a long time to invest for anybody, let alone a single mom who's running, an IT consulting business for herself. So she expressed interest, but said, hey, I don't have time today. I called her once, left her a voicemail, emailed her a week later, and no response off of that. And then promptly just forgot, right? Things slipped through the cracks. I didn't have a CRM system at the time. I didn't have systems inside of my agency. I didn't fully know what I was doing.
You had Post-it notes.
Right, yeah, I had Post-it notes and a notepad, right? So pick your excuse, whatever the reason. Ultimately, she slipped through the cracks. She was out for a run in the middle of the day a couple of months later, and she actually ran by my office. And there was a slight hill about 300 yards away. And an 18-year-old kid in a car was under the influence.
Damn.
Came up over the rise, struck and killed her.
Oh, my God.
No life insurance in place.
2 kids.
2 kids, single mom.
Wow.
Grandparents called my office. And I had to explain that there's no coverage in place for her.
Damn. That's crazy.
That will sit with me for the rest of my career. And that's what sent me down this path of process-driven, of technology, of there's no reason that anybody should slip through the cracks these days with the technology that's available. Any disconnect of disparate systems isn't because of lack of technology. It's because of a lack of partnership.
Yep.
Or a lack of alignment in moving forward. And
so is it from your standpoint, like, and I'm going further, but like, could I have done more? Is that like...
Absolutely.
Right?
Absolutely.
Yeah.
And so when I think about that, I bring that into us as a carrier, right? My experience as an agency owner, and then even on the carrier side, a lot of the relationships, the partnership relationships that P&C carriers say they have with agencies, that experience is me coming in as a territory manager, sitting down in Sean's office once a quarter and going, hey, Sean, how's business? I'd really love if you'd send us more.
You're like, shitty, what do you want?
And, what have you done for us lately? Right? That's the partnership conversation.
Like, where's my quarter zip?
Yep. And by the way, or hey, you were a top producer for us. Here's a little glass award or a plaque that you can hang on your back wall.
We always talk about acrylic.
Yeah.
That to me isn't partnership, right?
Yeah.
Partnership is saying, how do we help your agency be more productive and successful and meet both of our mutual clients?
Yeah, you win, we win.
Yep. So, one example of this is we know that Fair is a new carrier. We know that mechanical breakdown protection is a new coverage or a new product for these agencies to sell. And so we don't just come in and say, hey, you're appointed, here's a technical product guide, go and sell it. We'll come in and we've got a fully built out learning management system. We have a small in-house sales team that works with our credit union partners. We'll have them come in and help coach agents and producers on how to sell. We'll even do marketing on behalf of agencies where we'll say, hey, share your auto book with us. We'll batch rate everything and we'll send out personalized quotes and email campaigns that are co-branded. And so to help you activate and kickstart and get off to that fast start. And so we have found that these things, you can't just do one. You've got to help with the training. You've got to help with the coaching. You have to be there with the check-ins. You have to be there with the early activation and help with the batch quoting. We'll provide all service on the back end and be that ongoing resource. We've even got joint Slack channels set up with certain partners with our internal operations and product people so we can jump on in real time and answer questions. And these are the things that we look at that says this is what partnership looks like. And when we do that, we see the results from those agencies. For the agencies that don't engage with us on that, they don't activate with us. We don't see the production that comes out of them.
Yeah.
Our number one performing agency in October, November of last year, they were writing 1 contract a month. They have doubled and tripled every month since then. So they wrote just under 100 contracts this month with us, and we'll be writing them a commission check for over $25,000.
Damn.
Right. So it's really profitable for them. And it's really beneficial because they're addressing that coverage gap for their clients.
Very cool.
Did you look at all the other carriers and say, this is how these companies view partnership, and all we have to do is exactly the opposite of what they're doing, and then we'll be successful?
Yeah, I mean, it's not completely fair, right? They're so large, they're so established, they have to...
You think Sean's got an opinion on that?
They have to transition out of this legacy world, but I have felt that pain that Sean has felt.
Yeah.
We have this opportunity that we're scaling and we're growing, but we get to be very thoughtful about how we do that in today's world with the tools and systems.
Yep.
We don't have to unwind bad habits, bad practices, bad tech. There's no technical debt there for us. We just get to build the right way going forward.
It's why when we hire people that have never looked at insurance before.
Get them fresh. All right, so your tip for our bricks and riskers, our listeners and watchers, that I've been calling it now. So foundational best practices beat shiny objects every day of the week. Why are you kind of like shiny objects over here? Keep the fundamentals, foundational stuff here. Why is that your thought process?
Yeah, if you don't have good systems and processes in place as that foundation, it doesn't matter what tools or technology that you purchase. It doesn't matter how many carrier appointments you have or markets you're available to, because you're not going to see the results. Canopy Connect's a great example of this. It's a really, really powerful tool.
What is Canopy Connect?
So Canopy Connect will help you as an agency that says, hey, if you're coming to quote me and I'm your prospect, normally you'd have me fill out this fact finder or go find my insurance documents and email them to you. Well, that requires a lot of work on my behalf as a prospect
just to get
an insurance
started,
quote, right? And
Fax them over.
I don't even know if you're going to be able to help me, right? Instead, what Canopy Connect does for your agency is you send me a link and it says, hey, log in here. And Canopy Connect will automatically go out to my existing insurance carrier and pull all of my deck pages.
Oh, damn.
Pull all of my coverage.
Oh,
so
that's
I don't
sweet.
have to.
So you're like giving Canopy Connect access
Right.
to go get all the details of what you have.
Think of it almost as like a plaid, but for insurance.
Oh, wow.
It is a plan.
Right?
Yep.
And so really, really powerful tool, which is great. It cleans up a lot of the initial pain points from prospecting, but it doesn't solve the actual insurance sales process. You still need your agent in-house to pull that information, prepare the proposal, come in with strong advice, follow up with your customer, right? You still need that person to take those right actions and to have the right systems in place to actually do something with that information when it comes in. So Canopy Connect doesn't solve it. It just makes it more efficient. And I think about that with all technology or companies that you bring into your business.
Well, it's like you get into these channels, right, in like different Facebook groups or whatever, and the question goes out, hey, which CRM system should I choose? And you're like, doesn't matter.
Yep.
Like what are you looking to solve? Number one, there's obviously a problem if you're looking for either a CRM or a new CRM. So what's the problem, and what is your goal, and what is your process? So if you don't have that other information to build around it, it's like,
right.
Does it matter?
Right.
Does it matter which CRM, which one are you using now and why isn't it working, right? So you might have the answer. You might already have the platform that's right for you. You just don't know it.
So many people, so I'm in residential real estate. So many people in residential real estate will constantly ask me and ask each other, like, what do you use for CRM? What do you use for CRM? Like, everyone wants, well, what's your CRM? Like, how much is it? Like, how good is it? Does it have AI? Like, people are so...
That's the shiny object.
Yeah, they're like obsessed. They're like, who are you using for AI content this day? Are you using Claude? Are you using Gemini? Are you using Chat? Like, Chat's lame. Like, Claude's... Like, here's the thing. Tech is awesome. I think CRM tech is great. I think AI tech is great. But let's go with CRM because that's where I started. If you don't know how to meet people, get phone numbers, and get email addresses and build some kind of rapport, a CRM is completely useless.
Exactly.
Because if you go out and get a list of 1,000 people you don't know, which you can do that, and get their names and their emails and their phone numbers and set them up for automated SMS messaging or automated emails, how good is that going to go for you if you don't have any rapport? So I think the foundational fundamental thing that you were talking about relates to me as well, and I'm sure to Sean. It's like look, if you don't know how to like business develop, the tech is not going to do you any good. You could have the nicest website in the entire city of Philadelphia, but no one's going to care if they don't know who you are, what you're doing, like what you're all about, who do you know, like who have you helped, where do you sell, where do you not sell.
Why should I trust you?
Exactly. And I feel like the shiny objects, again, some of them can be a waste of time and money, but some of them are amazing when you need them.
Right.
You know, there's certain people, like for me, example, I've been blogging for like 15 years and I only started using AI a couple years ago. I did it from scratch. But now when I use it for blogging, it's so easy because I know how to write.
Right.
I know what I want to say. Like, I know how long I want it to be. I know how often I want to do it. So when I bring chat in now, when I do a blog post, I mean, I'm done in like 30 minutes. It used to take me like 3 hours. And it was like, what am I going to talk about now? Like now I can use that shiny object to improve my foundation, which is writing.
Yeah, makes complete sense. I mean, I think about it. We use Google Suite for our company, and Gemini Note Taker, right, in all of our calls. Well, now I'm not writing stuff down and not paying attention to what the person's saying to me, but then that allows me to use those notes that when I do my follow-up, which still requires good processes and systems, I can go refer back and find those key pieces of information and personalize the follow-up.
Right.
And so, but AI by itself wouldn't solve that follow-up process. It just makes it more efficient.
Absolutely.
Good tool.
Dude, great conversation. Really appreciate you coming in today.
Yeah.
So before we shut this one down, why don't you tell our listeners and watchers where they can learn more about you and everything you got going on?
Yeah, absolutely. You know, best place to find me, LinkedIn, Clint Houck.
Love it.
Otherwise, you can go out to fairwarranty.com, and we're actively looking to build partnerships and appointments across agencies, brokers, MGAs, and carriers right now in the industry.
Is there an ideal candidate out there that you're looking for? Or
yeah, ideal candidates would be those that have the capacity and systems to bring in a new carrier and a new line of business, because it's only successful if you're willing to put the time into it.
Did you go to Canopy Connect and say, can I have a list of agents that you work with?
No, but we did a great webinar together, and they've got a really active user base, and we've gotten a lot of great response.
I'll say it, it is the #1 technology add into our stack that's not even close with others.
Love it. All right, that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you next week. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.